What's going on, team? It's Caddy with Money Vesting. I hope that you all are having an amazing day. So in this video, we will be talking about the S&P 500 futures. Where did the market open tonight at 6 p.m. and where do I see it going next week? So we will identify those key support and resistance levels and potentially where the market can retest those levels going into next week. Now, before we get started, if you guys enjoyed this video, please make sure to drop a like. If we can get over 500 likes on this video, we will start going live every Sunday night at 6:30 p.m. and we will watch the S&P 500 futures every single Sunday, essentially going live and talk about some other stocks that I will be watching, and we will break them down together based on a technical analysis standpoint. Now, I posted this video last night, and again, I said if we were able to hit 500 likes, we will start going live every Sunday at 6:30 p.m. But we only hit 50% of our goal. We only got 221 likes. So if we can get 500 likes on this video, again, we will start going live and we will break down some top stocks that I will be personally watching next week, and I will also look into your guys' stock and we will break them down from a technical standpoint. So now we're going to jump into my TradingView platform and I will show you guys where the futures market opened, where are we currently trading right now, what the pattern looks like from the last 2 weeks, and where do I see those key support and resistance levels. So right now you guys can see that the futures market is trading and we're down about 45 basis points. So we are down close to 0.5%, which indicates that the market can potentially gap down tomorrow unless, of course, something changes overnight. So that being said, this is due to the increasing cases that we have seen at record levels in states like Florida and Texas. But one of the things to take note of is that our death rate or the mortality rate is much lower than previously recorded in April and March. So that's something that the market can potentially price in tomorrow, but only time will tell what happens going into next week. But looking at this pattern, and we have been following the S&P 500 futures for a long time, you guys can see that Thursday, June 11th was a really bearish day when the markets fell close to about 6%. On Friday, they did gap up, but they were essentially making lower highs and lower lows, and they sold off. And over the weekend, they essentially opened flat, essentially consolidating in this range before breaking down of that level and then maintaining that 29.20 as a really good support before rallying all the way up to 31.20 based on the fact that the Fed said they were going to start buying ETFs and investment grade bonds and junk debt. Now, for a very long time, the futures and the S&P 500 index were consolidating between this range that we have identified. You guys can see the trading sessions and trading activity for all of these days going back as far as Tuesday, June 16th to Wednesday, Thursday, Friday, Monday, and then Tuesday of last week. So you guys can see that the markets were gapping down, but they were making higher highs and higher lows, essentially in this trend channel, which was a sign of strength. But at the same time, they were making lower lows. So there was a very clear resistance that we have recognized at 31.50, but we can't make the same argument for the support because it was making lower lows. And then over the course of the next few days, you guys can see that the market broke below this red range or this area of consolidation and essentially pulled back and started to make even further lower lows. So if I were to go over to the daily chart for the S&P 500 index, which is going to be ticker symbol SPX, and this is what we're going to analyze moving forward. So right now you guys can see that there has been a very clear resistance at 31.50, which we have recognized in the past because the pattern has essentially gotten rejected here not once, not twice, but multiple times. Now that being said, it has also been making lower lows, as you guys can see, and this right here was the weakness that I was potentially pointing out in my previous market updates and going over the fact that there is a very clear horizontal resistance, but there is no support or no horizontal support. So essentially the pattern is going lower than it did the previous time. Now, even if the pattern does have a bullish day or a bullish candle, essentially meaning that intraday it's making higher highs and higher lows, it's pushing up, even then it's making low for the day that it did previously. A simple example is going to be these two candles right here. Even though we had a great bullish day, over 1% return on June 25th, the market essentially made a lower low. So that's a sign of weakness for the pattern as it is. So the interesting thing for us to look into tomorrow and going into next week is going to be if the S&P 500 is able to maintain its support at 3,000 levels. Right now you guys can see that it closed at 3,009 on Friday and it hit a low of about 3,004. So it hasn't really touched the 3,000 level yet, which is a very clear level of support and a clear level of demand for the S&P 500 at that level, which we essentially recognized as being a really strong bull camp when it comes down to the S&P 500. Now, if the pattern does break below the 3,000 level, the next support that I want you guys to watch very closely is going to be right here at around the 2950 level. And the reason being is because this level has previously acted as a really strong resistance going back as far as April 30th, and then again moving forward to May 11th, which is where the stock or the index essentially got rejected not once but twice, essentially making a double top. And if you were to pull back, you guys can see that there has been a lot of consolidation at that level. So this old resistance level can very well start acting as a new support if the stock were to pull back, if the index were to pull back down to that level, which can potentially result in the index dropping close to 1.5%. But moving forward, if I were to bring out the RSI and the MACD, you guys can see that the RSI is now pushing downward so aggressively, meaning that there has been a lot of selling activity for the S&P 500. And it goes without saying because we are approaching the end of the quarter and a lot of the pension funds and institutions had to rebalance their portfolios and had to offload some of their stock positions and move them over to bonds because of the fact that the market has gone up over 21% in the second quarter alone. So those are some massive gains for these pension funds and institutional investors, which they are looking to lock in. But that being said, there has been a significant amount of aggressive selling, and in my opinion, there has to be at least some consolidation before we see a further drop or even go back and reverse in direction, change direction, moving up higher. So now going back over to the futures market to identify where those key support resistance levels are going to be for the futures, you guys can see that it pushed up and it's now getting rejected right around the 3,000 level for the S&P 500 futures, and it's kind of curling back in, essentially indicating that it's going to sell off even further. So over the course of the next few hours and overnight, I'd be very interested to see where the S&P 500 futures essentially finds its bottom or its next support, because right now you can see that it gapped down again and it's going to struggle to break past the 3,000 level, which is now going to start acting as a new resistance for the S&P 500 futures. So now if I were to remove all these lines and if you go over to the 1 hour chart just to understand when was the last time the pattern essentially approaching this level, you guys can see that right around here back on the second week of June, we were right around this level where the S&P is trading now. So we've made a significant drop. Essentially we pushed up to the 3155 level, consolidated for a while, and then started to gap down. So you guys can see that these were the lower lows that the pattern was essentially forming on a very consistent basis. And this right here is going to be the horizontal resistance that the pattern has essentially gotten rejected not once, not twice, but multiple times. So now moving forward, based on this lower low and based on the fact that this right here has acted as a support for the S&P 500 futures, you can see how these two meet at the same level. So I do see 2967 for the S&P 500 futures, where it can potentially bottom out before consolidating again and giving us a minor push up. Because like I said, there has been an aggressive sell-off over the last couple days, which is why I feel like the market needs to cool off some of that selling activity before it consolidates a little bit and then changes direction as to where it needs to go, whether it's going to break below, break down of its support, or if it's going to give us a minor push up, which it has done multiple times. Even after the fact that it was making lower lows, you guys can see that it pushed up here, again pushed up here close to about 3%, and then more recently when it consolidated here, it pushed up with a minor rally of close to about 2 to 2.2%. So that's kind of like the similar idea behind this sell-off, is that even after the fact that it's making lower lows and the horizontal support is at 2967, I do see the pattern pulling back down to this level, which is going to be a drop of another 70 to 80 basis point, which can result in the market gapping down close to about 1% tomorrow, and then intraday it can either consolidate and then push up higher before it breaks below or breaks down to those levels. So those are some of those key support and resistance levels that I want you guys to keep a close eye on, and if we do break out or break down to those levels, it'll be really interesting to see where the pattern heads next. And I've also mentioned it in my previous videos, essentially going over Fed's plan, and they have put themselves out there saying that we are going to utilize all these tools to make sure that the markets are functioning properly and we don't essentially go into a stock market crash or a collapse. So to give you guys a quick recap on the S&P 500 index and the S&P 500 futures, 3155 again being a really clear resistance for both the S&P 500 futures and the S&P 500 index itself, which is going to be right around this level. Based on the support, you guys can see that it has been forming lower lows, and similar to the S&P 500 index, it has been doing that as well as a sign of weakness for the pattern. Now moving forward for the index, it'll be really interesting to see if the 3000 level holds as the support, which it has done previously multiple times in the past. And if it does break below that level, then I do see the pattern pushing down even further, close to about 2950 is where I see the next support to be. And similar to the S&P 500 futures, this right here, the 2960 to 2967 level, is going to be acting as a really strong support based on the fact that it's been making lower lows, and that's also where the horizontal support falls. So if you guys enjoyed this video, please make sure to drop a like, and if we can get over 500 likes on this video, we will start going live every single Sunday, and we will break down the S&P 500 index, and we'll also start talking about some really interesting stocks to look at that are going to be on my watch list, and I will break down some stocks for you guys as well from a technical standpoint. As always, if you guys enjoyed this video, subscribe and hit that notification bell so you don't miss out on any future market updates and videos related to technical analysis and some stock breakdowns. I hope you guys have an amazing day, happy investing, and I will see you guys in the next video.